if the bank were to fail today, how much FDIC insurance does this account number have? And then also it's if you guys were to receive a letter saying, freeze these accounts, like immediately, what would happen? So I'd like to speak with whoever it was that came up with the idea of a trust account, that the naming is, leaves something to be desired. Every single association has, 2+ bank accounts, right? You've got the operating, you've got the reserve, maybe you have some escrows for taxes or something else. So if you're managing 100 associations, you've got 250, 300 bank accounts. Why is private equity or why is institutional capital interested in this space? It's because you have the ability to essentially vertically integrate a bunch of different services. And what is the hub out of which a lot of these services can theoretically originate? It's management, right? It's the management of the real estate.
All right, everybody, welcome back to another episode of the Evernest Property Management Show. I am one of your hosts, Spencer Sutton, and today I have my co-host with me. We've done a couple without you, but good to have you back in the seat, in the saddle.
Yeah, we're kind of like in this new sitting position, and I'm having to look out of the side of my eye just to see you. It feels a little weird.
Just pretend I'm not here.
Okay, that's easy. I can do that.
So welcome to the back, Matthew. I mean, and actually I ran into Graham in the hallway, and this is the third podcast I've done today. And
did you change clothes?
He asked me if I was doing that, and I said, no, I'm not. It's just going to be the same. So if you're watching this on YouTube and you've seen the past 2 weeks, so I'm wearing the same clothes.
Profile picture for Evernest, you've worn the same shirt for 10 years. So I don't think that it matters.
That's correct. I've got one dress shirt.
Like literally, this is no joke. He has the same blue shirt that he's worn for 10 years.
Yeah.
So nice shirt.
So here, this may be my podcast shirt. This is it.
There you go.
This is it.
Your podcast uni.
All right, everybody, let's get going here. Today we've got a special guest. Well, it's not just the two of us sitting here talking.
Although we are very special, we do have a special guest. Yeah, I'm excited. Marshall, you and I have known each other a long time, and you've got some really exciting news to share with everybody. I think it's out, so everybody knows. But Marshall has been in the HOA and property management banking space for a long time. I bet we've known each other for the last 5 years, 6 years. We've sold a couple of HOA management businesses, and you've been very helpful to help us do that. So we're excited to have you here in Birmingham at the NARPM Southern States, and thanks for coming to the office and doing a podcast with us.
My pleasure. Thank you guys for having me. I've never actually been in a podcast studio with its own craft services, so this is nice and fancy. I like it.
Did you say craft services?
Yeah, it's a nice setup. It's behind me. It's off camera, but
that's not a bad idea. We do need beer, and we should have tons of different drinks, people's choice in here. What have you been doing?
Noted.
Yeah.
Noted. I'm an idea man.
There you go.
Noted.
There you go. Not just excellent banker, but also a great idea guy.
That's right. That's right.
So y'all made, I could not believe it when I saw it on LinkedIn. I saw it on my phone. First thing I did was text the two of you, but excited about your new gig. You want to tell everybody?
Yeah. I mean, I'm not going to spend too much time talking about myself because I definitely don't love doing that a lot.
That's different from Spencer.
Right, yeah.
We can't get him to shut up.
I'll fill in. I've got some great
talk
news.
about me for no, I'm super excited. I'm going on week 6-ish, 6-7 of being at Enterprise Bank. And just like you said, I've been in the space for about 7 or 8 years. And the last probably 3 or 4, I've known Allison, and we've been competitors. But now, it's one big happy family.
Yeah.
I'm working alongside her and Jeremy. I'm doing not just the HOA banking, but the property management banking as well. So hard to be more excited than I am now.
And Allison's like a rock star in the space. So,
but you told us you were like beating her, like you were crushing her.
No,
they begged you to come and
they
join the team.
politely asked me to stop winning so much business away from them.
There you go. And so now y'all are doing it together. That's right. Awesome.
No, it's exciting.
And so I think one of the things that, and we moved to Enterprise probably 4 or 5 years ago. I think for people may not be listening for the first time. I know Allison's done a bunch of podcasts, but Talk about why somebody like an enterprise can better bank property managers and HOA managers than a traditional bank.
Sure. I mean, there's two pillars, right? It's the idea of a trust account. Allison's talked about it quite a bit, but the two pillars are essentially you got to keep the money safe from an FDIC insurance perspective, ensure that there's adequate insurance, and then you also have to qualify the funds as not belonging to the broker.
Right.
Right. I mean, that's the two basic tenets of a trust account. There's plenty of legalese that I understand like 40% of behind that, but that's like 90% of it.
We actually realized when we moved over to Allison that we had a number of trust accounts set up incorrectly. And so we had to do some things and, it wasn't hard things, but we just realized that Allison's has very deep knowledge around trust accounts and understanding how they're run, and Enterprise Bank does. And so we were doing it incorrectly, and I'd been doing it almost a decade by that point.
It's interesting that the two questions that Allison and Jeremy were telling me, they're like, listen, if they don't know, if a property management company does not know if they have a trust account and it's set up as a true trust account, have them ask their banker to ask legal and compliance two questions. And that's basically, if the bank were to fail today, how much FDIC insurance does this account number have? And then also it's, if you guys were to receive a letter saying, freeze these accounts, like immediately, what would happen? Right? Those are sort of the two questions that a legal and compliance team can answer that a branch manager or even, somebody who isn't specializing in the industry, they might just say, oh yeah, $250,000 FDIC insurance is standard. But those two questions, it helps figure out whether or not it's set up as a true trust account.
And a true trust account gets $250,000 per person that those funds represent. So if you have 10 people, it's $250,000 times 10.
Yeah, that's right. So it's every single one of your clients, your managers, the tenants, every tenant that sticks money into the account, $250,000.
Yeah, clients and residents.
So what do you like? What is the most common mistake you see that property managers make? If you said that Allison corrected us and said, hey, we were getting some stuff wrong, like what do you see is the most common mistake?
I hate to just hammer it, but it is the idea of like a real trust account. I mean, it's very simple, but that is sort of the first, second, and third message, is that it's just very difficult for somebody to, if they've never heard of the trust account, figure out, well, where's the trust agreement? No, there is no trust agreement, right? If you're from a banking perspective, they assume that there's going to be a trust agreement somewhere. So I'd like to speak with whoever it was that came up with the idea of a trust account. That the naming is, leaves something to be desired. But
and you've gone really deep. I mean, in the HOA space, are you still targeting the HOA? Or do you still think that's going to be a lot of your business? How are you thinking about that as it relates to them? It's funny because we both call ourselves property managers. When I'm in the HOA world, they think of themselves as property managers too.
So New York's, I live about 45 minutes outside New York City. And so for the first handful of years in my property management, HOA, whatever you want to call it, in my career on the deposit side of the balance sheet, New York City just calls everything property management, condos, co-ops, multifamily, managing individual. It's just property management. And so the second you get outside New York City, then it's association management or HOA management, whereas property management means, residential.
Bunch of different family
home. I mean, who knows what it means?
Yep.
But all that to say, I'm going to be doing the condo HOA side, which is just kind of all-encompassing associations of any type. And then also the residential, single family, multifamily. It's two slightly different sports on the banking side and obviously on the management side, as you guys know. But that was one of the primary reasons that I actually joined Enterprise, is that they are probably the only bank that has a phenomenal HOA team and as we all know, an unbelievable property management team. And that's it. You can roll them up under one, but having them separated and doing them both incredibly well is pretty difficult.
Now, are you going to be a utility player and play out of on both teams?
I am.
Nice.
I am. Yeah.
Nice.
I'm kind of drinking from two different fire hoses right now, learning a couple of different procedures and trying to figure out twice as many people that I need to be nice to at Enterprise.
And if you think, because there's a lot of PMs that probably listen to the show that also manage HOAs, how should they think about the banking relationship there? To me, the HOA space is a little more mature than the SFR space.
In certain respects, yeah. I agree with that in certain respects. From a banking perspective, it's obviously it's a different world, right? The HOA, condo HOA, call it what you want, is, I kind of say that the battle between softwares and banks has been fought, and the softwares, they won, right? Mm-hmm. The HOA management industry just lives and dies by its software. The bank, the most important thing a bank can do is integrate with that software. The idea of banking in the condo HOA space is we try to keep them out of our platform, right? Like, name me another industry in which you want to get people's eyeballs away from your product, right? It's like extremely counterintuitive, but the functionality of the HOA software, I mean, they're basically doing all of their bank transactions out of the software. So that obviously is different from the property management space, right? It's primarily about, like we were talking before, making sure that the funds are secure and properly identified, right? So it's a much different perspective from the banking side. I mean, there's some softwares obviously that do both. Mm-hmm. So I'm not sure if do we give free advertisements or what's the policy?
Yeah, go for it.
Right, cool.
Yeah, we're shameless. We give shameless plugs all the time.
Well, yeah, AppFolio obviously does both. New York City is, Yardi has mm-hmm. God knows how many doors in New York City. So there's a couple of softwares that do both pretty well.
One of the things that's happened in both industries, and you've had a unique view of it. One of the reasons I know this is because you and I have talked about our HOA management business, and when we sold it, is you have a unique view into private equity coming into the space. I'm curious, how do you think about both spaces, the SFR management space and the HOA management space, and how private equity is starting to view that?
I like talking about this topic more than I like talking about just banking in general.
All right, well, we're on it.
Yeah, let's do it. And I'm pretty open about it. I just find it more interesting. Banking is kind of plumbing and just getting data where it needs to go. The idea
and credits,
and sure, of course, yeah. But the idea of this industry and kind of the consolidation, and we'll just call it institutional capital in one way, shape, or form, coming into the industry, both HOA and property management. I find that just absolutely fascinating. And when I kind of fell backwards into the banking of this space about 7-ish years ago, the first thing I saw when I looked around was just like acquisition, consolidation. It kind of blew my mind. And as I started to work more outside New York City, I saw that it wasn't just a New York City phenomenon, right? It was happening across the country. And so I just have decided over the last 7 or so years to just make a general nuisance of myself with anybody I met who was interested in acquiring, right? And that was how we first met, had nothing to do necessarily with banking. I just kind of like chatting about all the acquisition stuff that you guys were doing. And I met enough people who were gracious enough to just let me do some brain drain and kind of absorb all the knowledge from the acquirer side. And then I started to, over time, just, meet people who were also looking to sell, and started to just kind of put people in touch and worked hard to kind of establish that if you were looking to buy or if you're looking to sell, like, I wanted to chat with you. Like, that was kind of my goal. And so obviously with a lot of the private equity firms, family offices, call it what you want, coming into the space, it's been really interesting, right? You go to all these conferences and there's typically going to be anywhere from 4 to 20 different groups walking around, trying to meet people, trying to learn about the space. And from what I'm not going to name any names, no free advertisements. Also,
especially for those guys.
That's right. That's right.
They wouldn't need to pay for their own advertising.
We got some blank space on the wall up here. I think we got at least room for, right? What I've seen, something over the last couple of years, is that some of the groups that are having the most success, it's not that they're the smartest or the hardest working or the best funded, or they have a better tech and AI team than some of the other groups. It's they have sponsors, they have partners, or they have people who know the business, who in some way, shape, or form have exposure to real estate or the management of real estate. It's because you can be the smartest person in the world and work harder than everybody else, but if you don't necessarily understand the intricacies of dealing with a cranky board member on the HOA side,
right,
or like how difficult it can be to accomplish some of the things that you guys are. I mean, it's crazy. It boggles my mind. But the successful groups, I've noticed a little bit of a through line where there's like somewhere in there they have experience on the actual real estate and the management side.
And they're not; those groups are not trying to win you over. So when you talk to them, what interests them in the space? Why are they pouring capital into the HOA roll up or the SFR roll up manager space? Yeah,
that's a good question. It's a really sexy, attractive business and industry. That's why. That's like full stop.
It is. We think about it being sexy too. So
it's glamorous.
Yeah, if people saw our day job,
the big thing.
I mean, if people saw what I did on a daily basis, they would just realize how sexy this thing is.
It's the next podcast.
That's right.
You're welcome.
A day in the life.
That's right. Private equity is interesting, right? Because one of the tenets of like the entire private equity model is that several of the things that private equity is built on is present within the HOA and property management ecosystem, right? You've got the recurring revenue, right? You get the management fees every month, both the property management and HOA side. That's incredibly attractive. You've got what should theoretically be sort of a sticky clientele, right? If you're a board member, it's a pain in the neck to fire your management company, right? If you have a property manager, it should theoretically be a pain in the neck. Obviously, there's terms. It should be, right? You've an incredibly fractured industry. I mean, I don't know what the actual the fragmentation is absurd. I don't know what the real number is. I've heard like 80 or 90,000 property management companies. Is that really?
Is that right?
I don't know. That's a lot.
Right?
There's a lot.
I saw that somewhere.
There's very few big ones for sure.
So the idea of an incredibly fragmented industry is obviously very attractive.
And do you think, in terms of the arc, I always perceive HOA as being further ahead in the maturity. Is that how you think about it too?
And as far as the consolidation is concerned, or
yes,
the industry? Okay, I think so. I think you've got a couple of you've got the Coke and the Pepsi. You've got First Service. You've got Associa. First Service is obviously publicly traded, so they've been around for long enough that sure. I would say it is more mature in the consolidation. In some respects, I think HOA is actually behind the property management space, not necessarily in the consolidation, but yeah, from a consolidation standpoint, if any industry, if you're consolidating into like 3 or 4 players, traditionally are going to hold like 70 or 80% of the business. Is that theoretically where like a stable market is? I think I've heard some smart people.
Wow, we hope so.
I mean, well, that's so. We're pretty far away from that.
We are so far away from that. Yeah.
I mean, but like if you think about like any of the mature, like soda, just Coke and Pepsi is sort of the example I keep throwing out there. But
and when you think about the differences in the business, one of the things I really got wrong, because we were excited about the HOA space and we were going to make a run at building both businesses at the same time and scaling both businesses, and we just realized our perception is that these are entirely different businesses with not a lot of crossover. And so tell me how y'all think about the differences in the business.
Sure. From a banking perspective, it's similar insofar as that our client, the management company, the HOA management, property management, whatever it is, they're handling other people's money, right? So the idea of handling other people's money should theoretically be the same, but obviously it's not with associations. Every single association has, 2+ bank accounts, right? You've got the operating, you've got the reserve, maybe you have some escrows for taxes or something else. So if you're managing 100 associations, you've got 250, 300 bank accounts. Property management, it's like a couple per state, right? 3 per state typically. But as that's very basic difference.
Right.
But once you start getting into sort of the functionality again of the accounts, it has to do with, again, our job on the HOA side is to keep people in the software, right? Allow them to transact in the software and kind of get them out of the bank software. The property management side, they're still power users of our online banking, right? So the online banking portal has to be tip top. The functionality and the ability to transact through the banking portal has to be there, and it has to be top notch. I think on the HOA side, from a manager's perspective, it's a lot of, it's like dealing with board members can like armchair psychology almost, right? Mm-hmm. I mean, you're just dealing with sometimes completely irrational people, and the horror stories I've heard from some of my friends.
Yeah, there's a lot of irrational people in both spaces.
Yeah,
I can tell you.
I was about to say both spaces.
There's a lot of irrationality.
Yeah, I mean, it's crazy, but from going back to the maturity of the industry thing, something that always kind of surprises me is that I shouldn't say surprised, but something that I've noticed is that on the condo HOA association space, that industry the margins aren't as good, right? So first and foremost, the margins aren't as good, but they are not quite as good at monetizing the portfolio, right? So the property management space, what they do really well is obviously you've got the management, mm-hmm. you've got the maintenance, you've got the brokerage, and then there's plenty of other things that you can do. That type of monetization doesn't necessarily exist as well. It exists, but I don't think it's as far along.
Yeah, it's not as mature.
It's not as mature. So it's when you kind of go back to the idea of sometimes the kind of HOA space is more mature, sometimes it's not. It kind of depends on what area you're talking about.
It's funny, all these spaces are tangential. I actually heard recently that the SFR management space is more mature in terms of technology than the multifamily space.
Interesting.
Which I thought was super interesting as well, because we were solving, if you think about it, the SFR world is trying to solve really hard problems around logistics and how do you get around town and how do you make it easier to manage 300 doors for 300 different clients. And so it just took better technology so that the industry could mature. And my guess is that the multifamily space has just gotten very old and just kind of set in their ways. And so now all of a sudden they're starting to adopt some of the SFR stuff. So it's interesting how all these industries probably headed to a similar place, yep. But we're all more mature in certain areas based on probably the early challenges.
Yeah, and going back to the idea of monetizing a portfolio, obviously you have to provide value if you're charging fees, but the idea of how successfully you can monetize a portfolio kind of tracks back to why is private equity or why is institutional capital interested in this space? It's because you have the ability to essentially vertically integrate a bunch of different services, and mm-hmm. what is the hub out of which a lot of these services can theoretically originate? It's management, right? It's the management of the real estate. So it's a pretty exciting space to be in, right?
Yeah, and I always talk about how powerful the relationship is with the resident. Our direct contact with the resident, our direct contact with the owner, our direct contact with the vendor allows us to do those things. If we had to go through somebody else to get to them, it's harder because there's a filter in between us and ultimately the customer.
Yeah.
That kind of brings to mind to another question. As you talk to all these buyers and talk to all these sellers, if somebody was a seller that was going to sell in the next 2 or 3 years, how should they prepare their business? I think more on the SFR side if you can, but how should they think about preparing their business to be sold?
It's funny. I actually, you guys discussed this a little bit in one of your previous podcasts that I was listening to, and I laughed because as I was thinking about some of the stuff that I wanted to say, I mean, you basically, you have to kind of understand your numbers, right?
Yeah, I think Matthew had said, get your financial house in order.
Yeah,
right?
exactly.
In that podcast,
Exactly.
yeah.
That like just understand what your numbers are, right? So get it in order, maybe understand the difference between something like compilations, reviews, audits, just kind of understanding what that all means and get it in order. Have your CPA take a look because, that's the first thing that they're going to see is they want to see the financials, and that's first impressions are important. And if your first impressions are a bunch of numbers written on a napkin, that ain't a good first impression.
That's been the property management space for a long time. It's just been very, slow to get into technology. And
Yeah, I mean, you and I've been in long enough to see handwritten ledgers.
We actually went and sat down with
That's
we actually went and sat down
true.
with a group that we were thinking about buying here in Birmingham, and they had handwritten ledgers. They were doing everything, and I just remember going, "Oh my goodness gracious!"
And since Spencer was born before computers, I had to take him with me to like translate.
Before cars.
What does
What are
that
you talking
mean?
about?
Yeah, what does that
I've
mean?
seen it all.
Yeah.
Well, it was funny. The other thing that you mentioned was the idea of, I think the way you phrased it was like make yourself less important to the business, right? It's sort of like a head-on way of like it's right. It sounds weird to say, but that's
a sellable business.
100%.
If you have a job, then it's hard to sell that job. But if you have a true business that can run without you, if you could take 2 or 3 weeks off and the business doesn't desperately need you to come back to run, that's an easier business for somebody like us to buy.
Yeah. Also, from a buyer standpoint, if we're buying somebody, those relationships, if that person's in the day-to-day, those relationships that they have with those owners, it's makes it much tougher for them to turn those over and for the owner to trust us or whoever's buying them. It just makes it a lot more complicated.
Yeah, a friend of mine, he told me something. This is at some point in the last couple of years. He's out of the Boston market, runs a nice company up there, and he said, I sat down with my lieutenant and I was like, what do you need me for? Like, make a list of all of the things you need me for. Like, what do you come to me for answers on? He's like, and we need to solve that. He's like, I'm not going to sell at any point, but we need to start thinking about this over the next several years because, the further away you get, he's still hands-on, he still knows what's going on, but having people come directly to you, if you can kind of create a process, and again, processes, procedures, this industry is all about that. That's going to make the business a lot more attractive.
Matthew, he doesn't even know what's going on in the business anymore. he has achieved like peak nirvana of this business.
Clearly, since you're still here, I'm,
That's right. I just hide in my office. And
every now and then Spencer will run down the hall like he's busy doing something and send the signal. I had to literally move Spencer over here right by me so I could keep an eye on him.
I think you've said something about if you have to tightly manage somebody.
You probably hired the wrong person.
That's right.
That's right. Going back to, as we start to kind of like wrap this thing up, going back to the banking, what are some blind spots that get exposed, when owners decide to sell? What are some blind spots that get exposed when y'all start to have relationships? Talk about just things that people don't know.
Sure. From a banking perspective or just sort of from transactional or sort of like this?
Well, because we did kind of talk about the banking artist, so let's talk about transaction.
Sure. So, I mean, just to think of some recent examples, it's if we're going to look at the condo HOA space, as silly as it sounds, I've seen the management contracts have been 40 years old and haven't necessarily been updated since then. They were just they were signed 40 years ago by the board, and it's great that they've had this client for 40 years, but they've never been updated.
Yeah, they're in a filing cabinet somewhere. Yeah, who uses filing cabinets, right?
No. I can't imagine using a filing cabinet, right? But there's things as archaic as like, you have to open a bank account at this bank or a bank in this county, and I've seen it where that bank doesn't actually exist anymore. So
That'd be a problem. They've probably bought 3 times since then.
Yeah. Just having a kind of a good grasp on the contracts.
Yep. So we're going to hit some wrap up questions real quick. First question is, you've seen a lot of companies scale successfully. What's one thing the best operators do differently?
Sure. I think primarily everybody says this is a people industry. This industry is all about the people. Some of the best, from what I've seen, some of the people who I consider the best operators, they have the best one or two people underneath them to help them out with the business.
Right. It's just not one person.
Right?
It's
not,
putting together the best team.
It's not just one person.
Yep.
It's not just one person. And that's private equity. Again, going back to this idea, the first thing, not the first thing, but one of the most important things is, how's the management team?
Yeah. How good is that? That's awesome. Great. Second one is, if a listener could take one nugget from you from the show today, what would you hope that they remember?
I think that the idea of a true trust account, as much as Allison has been talking about it for a decade, it's still kind of crazy how many people in the industry don't really understand it. So just listen, if it's with enterprise, fantastic. Would love that. But just, setting your accounts up properly to be in compliance with the DRE and all the other things we talked about, that's important. I want that for the industry.
And the thing I would add, if you don't know, it's probably not. I mean, that's the thing. If you're I know for 100% fact that mine is set up correctly, then it probably is. If you fall into, I don't know, then the answer is probably no.
Yep.
And it's funny because people will oftentimes default to asking their CPA. Their CPA probably also doesn't know.
Yeah. How many trust accounts does a CPA deal with? Yeah.
Well, Marshall, thanks for this. If somebody wanted to get in touch with you, what would be the best way to do that?
Sure. Feel free to reach out to me. I'm somewhat active on LinkedIn as far as liking and commenting. I got to start posting more, but reach out there. My email is mfulton@enterprisebank.com, and always happy to serve as a resource regardless of whether or not it's about banking.
Yeah, so you can check the show notes. We'll have both of those links in the show notes, your email and your LinkedIn.
Cheers, guys. Thanks for having me.
Awesome.
Yeah, thanks for being here.
Thanks for being here. All right, everybody, that's it for this week's episode, and we'll be back next week with another episode of the Evernest Property Management Show.
Bye, everybody.